Hey everybody, this is Sean with Not Financial Advice. Welcome back. If you saw the thumbnail and title of today's video, what we're going to be discussing is how I made over 100% on three different stocks. And, I'm going to talk to you about the ways that you can do that as well. Now, it's very easy to look back in hindsight and say we should have bought Apple in 2003. That's easy. But what I'm going to show you throughout this video is the three stocks that I invested in when I first started investing in them, what I knew at the time, what led me to believe that they would outperform. Now, at the end of the video, I'm going to also give some clues as to what I think my next three stocks, which will return 100%, would be. But more than anything, teach you the ways in which I've learned to invest. And we're going to get into all of that right after this.
You need to diversify your bonds.
The only problem you're gonna have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right. Well, thanks so much for being here. And I'd like to take a second to thank my recent new subscribers. We have about 25 or 40 of you all. And I just really appreciate you watching my videos. It seems like you've received value from my videos. And so I just want to thank you for subscribing. If you're someone here new today, I'll ask you to like the video, subscribe to the channel. Now, let's dive into today's topic. So, as we always do here at Not Financial Advice, you can see a behind the scenes look here at my portfolio, 100% transparency. Today is Thursday, May 16th, I believe it is, and it's around the middle of the day. My portfolio is up 0.26%. The stock market is up 0.16%. Yesterday, we had cooler than expected inflation numbers with softening retail sales. And today, there isn't much news that's moving the market to my knowledge. But we have sort of what's going on in the market today represented here in my outperformance. So, my top five stocks today are going to be True Leaf Cannabis, up nearly 10%. I'm also seeing Green Thumb Industries and Curaleaf both up around 6-7%. I think that there may be some news relating to this sector. This is a little bit stronger than average performance, even though these have been running for quite some time. So this is what's helping me to beat the market today. But then we also, again, have Target and Dollar General. Now, two retail names that sold off too much yesterday, but I believe there's a lot of value left. And so the market is responding to that after they dipped yesterday. Now, the five stock ideas that are not working so well for me are Coinbase. So, one of the stocks we're actually going to be talking about, down 7%, really just going back to where it was 3 days ago as it gained about 8% yesterday. So, no big deal. We also have Mexican Coke, Caterpillar. We have Solventum Corp, which is a spinoff of 3M on the medical side. And then we have Meta. So not really a rhyme or reason to how the market's performing today. But now for the main attraction, we're going to take a look at the three stocks that I've had returns of over 100% in. And then we're going to sort of address each one of those in the ways that I mentioned. We're going to go through it now. So first and foremost, let's start by taking a look at, I think we'll start with Meta. And so this is a sad one because I didn't have enough conviction. So I have 1.15 shares of Meta or Facebook stock. So that's the tragic part. $545 of value, but 100 and about 15% gains at this time. And so I've made $291 on the stock. Now, thinking about that, some good news. When it comes to Meta, I'm a little bit different than other investors. I both invest in individual stocks as well as funds. So, a lot of the gains that are here in the total US market fund include Meta. That's going to be the same situation when we look at my VUG large cap growth index, and I also hold this fund in an ETF format. And so I've got $17.3 thousand of value there, and $1,400 of value there. So the good news is I've caught some more of that upside, but I didn't have enough conviction in it when I first bought Meta or Facebook was in May. Was in May. It was May 20th of 2022. So what did I know at that time that led me to buy this stock that I'm now up 115% on? So let's start on May 20th of 2022. So when we look at Facebook, obviously that's a great looking chart. In hindsight, you'd have loved to have bought it anywhere around here or here, right? But even over the last 5 years, it's just as impressive. So up 156% in 5 years. So over the last 5 years, it's returned 31.2% a year, beating the market. Past performance doesn't indicate future results, but sometimes it kind of does, not financial advice. So where was I when I first bought this stock? Well, I was sitting here, the same place I'm recording the video, but I bought it on May 20th, right? And so what I had noticed when I first opened up my position is that this is a large cap tech name, a high quality name, and it was down 49% at the time. So I felt safe to buy. And so this really is a lesson that you can learn or you may have experienced yourself, but it was down 50%. How much lower can it go? So I opened my position into it and I did dollar cost average into it until late 2023, but just in very small amounts. But I bought it and then it went down. It was down 49%. Then it went down another 53%. And so I had emotional damage from that probably until, um, probably until some point through here when it was starting to become a little bit too late to pile into it to an extent. It rose another 50%. But that's how the market works, guys. And so since I bought in on May 20th of 2022, we can see that the stock has returned 145%. But the times in which I bought obviously reflect the gains that I have in this position. So what did I know about this stock when I first bought it? We're over here on Qualtrim. I'll leave a link for it in the description below. Not affiliated with Qualtrim, but bar none, the best tool for researching stocks. It's better than every other tool, and it's essentially cheaper than every other tool. $10 a month. I pay for it. I'm not affiliated with it. I'm going to leave a link to it in the description below. I couldn't invest without it. So just a quick note on Qualtrim. But looking back back to May 20th of 2022, right? So that probably would have been, we probably would have just had first quarter, or we probably would have just had maybe like fourth quarter results of 2021 at that time, in so many words. So let's just view this from the perspective that I had in 2021. So this was around the time in which I was buying, and I just saw, a really healthy run up over 5 years. One, two, three, four. So 1, 2, 3, 4, 5, really high top line revenue growth. And so, it started to come down through here, but this is the data that I was looking at when I made that purchase of Meta. Now, the things that kept me out of the stock initially is that it leaves a bad taste in my mouth. Meta is only 50% as good as a tobacco stock. It's not great. It's toxic. And, I use it to stay in touch with friends on Messenger. People in the rest of the world use WhatsApp for business communication and cross border messaging and calls for free. But then, here on Instagram and on Facebook, there's just a lot of toxic political and, body image or, sort of covetous type behaviors that are on here. And so I use it many times a day and have for a long time. And at this point, being uh, only 50% as bad as tobacco stocks, I felt okay buying it. And that was sort of the information I had at that time. And again, I saw this run up. The revenue or the growth slowed down before accelerating again. And that's the story of how it ended up having stronger returns. But when it comes to free cash flow, this is the picture that I had. I looked back 5 years, 1, 2, 3, 4, 5. And so I just saw really good, strong growth in free cash flow. And this is where it started to crater between here and here. And this is between here and here is when I started to pile into it because I thought the reaction was too much to the downside, and it was, because look at the cash flow that it produced. You see a mean reversion. And so, I think when it comes to revenue and cash flow, I don't think we need to um, go into each and every metric that I often do. But they've always had a good pile of cash that didn't hurt. Um, since then, they've started paying a small dividend. They had um, not too much. They didn't really have a track record of diluting shareholders. They were a moderate repurchaser of shares, and they always had really high returns on capital. And so this is the reason I decided to get into this stock. But because it went down 50%, I bought in, and went down another 50%. And because of some of my misgivings about the appropriateness of this business model, that's why I didn't buy in as much as I should have. But hey, I still made 115%, what have you, couple $300. Now, let's move on to our next stock, one I feel really, really good about, Williams Sonoma. I'll take a second out and ask you to like the video. And, around 60 or 70% of my views come from people who aren't subscribed. And so if you're getting value out of this right now, or maybe you've seen some of my content in the past, I definitely encourage you to subscribe to my channel and turn on notifications, as I think I bring a unique, fresh perspective to stocks and investing. And you're not going to find me and my views from my perspective anywhere else. So please like and subscribe to my video and channel. But looking at Williams Sonoma, you know, that's just a majestic chart. So over the last 5 years, it's returned what? I mean, 90% a year. That's just nuts. You can see that right there. And so when I first bought into this stock, Williams Sonoma, was August 3rd of 21. Let's take a look at that. August 3rd of 21. And so buying this stock, I had seen that it had run up at a similar rate, and secretly you would hope that the stock would continue to go at the same rate as it had in the past. Sometimes the super high quality business, strength begets more strength. And so I saw this price action here, and I started to get into it. Now, I did a better job here, because this is more in line with sort of a Warren Buffett, Peter Lynch, sort of value style stock. And so as it went down 30%, that made me feel better about it. So my position sizing was more appropriate. But I started buying on July 30th. As it continued to go down, I averaged into it and continued to buy, maybe up to probably up to, I probably continued to buy till I got back to even, right? I think I did do that. So just look at what that looks like. What is that? A year and a half, something, two or so years of just nothing. And now look at where my gains are at. I'm up whatever it was, 120%, 130%. And that's how that stocks move. So Buffett says that the market is a way to transfer wealth from the impatient to the patient. And I guess that's me. And so let's take a look at the perspective I had on Williams Sonoma WSM as of the time I first bought it, around August of 2021. And so we'll go through it here. August of 21. So we're starting to get some of these numbers, but I had just seen a nice glide path up and to the right with revenue growth. Over the last 6 years, it's returned a little bit over 6%, which isn't great. Kept some other people out of it, kept some people from seeing that value, but it was always a big, big deal when it comes to free cash flow. And so it wasn't super hard when I was seeing things like this to know that I wanted to be in it. Now, there were some ups and downs along the road, right? But look how I was here and I was seeing this, and I held my conviction. You can't borrow it from anyone else. You have to have your own. Maybe watching these videos and getting a Qualtrim subscription does that for you. If you've subscribed to Qualtrim because of my video, leave a comment in the description below. But we can see that as I saw the jump from here to here, I held my faith, and then we got these results with growing free cash flow. So this was one it was easier to have conviction in, as it's only at a 19 PE right now. When I first started getting into it, it's probably a 13, 14, something of that nature. But some value characteristics, buying back shares, high returns on capital, things of that nature. So yeah, did really good on that position. Let me just refresh my memory on that. So Williams Sonoma, okay, I'm up about 119%. So that's the story of how that happened. Now, what we'll do is we're going to look at our last stock that I had really strong performance in. And so I'm up about 170% on Coinbase. It's grown into my fifth largest position. Actually, so I'm up about 153% rather. 153%, give or take. And so it's funny because I'd been up as much as 220%. And so the question is, why didn't I sell it? Why didn't I sell it? Why did I buy it? Not only why did I buy it, but why didn't I sell it? So I first got interested in coin stock around the same time as Williams Sonoma, a little bit later, August 16th of 21. And as I, like an elementary school child, try to figure out which months come before and after each other, you should just take heart that you don't have to be a genius to make money in the stock market. All right. So, like the video, subscribe to the channel. So, August 16th. So, I took interest in this stock probably before this time, as it IPO'd, but I also had learned by this point never buy a stock right at IPO. And so that was a good move, right? Because I waited until about August 16th, and the stock bled off 24% of its price, of its market cap. And so that's cool. And so I bought this guy, and I did buy it. I bought it with a lot of conviction. And this was part of me developing as an investor. So if I bought it around this point, I experienced some drawdowns. So I experienced drawdowns, Great Depression level drawdowns of 87%. So how did I have this become my largest returning stock position? From the first time I started buying, down 87%, Great Depression vibes, then recovering 476%. So I did pretty good. I did okay. And I had as much conviction as I did capital. And let me just show you, looking in late August, what I was able to see on this company. This only has about 5-6 years of financial data. So let's look, sort of on a quarterly basis, but late 21 may have been reflected here. And so I saw that the revenue from here to here was substantially higher. I knew there was a lot of volatility. I think that prepared me for the up and downs in the stock price. And this gave me a nice, sometimes when stocks go down, that's actually a good thing. Gives you a little bit of time to build that position, right? So I had all this time to build the position, but I had the conviction that it would come back. Why is that? Here's why. When I learned that people like BlackRock and billionaires, trusts, sovereign wealth, very smart people were accepting Bitcoin as an asset class, I said, okay, that's cool. That's great. It doesn't fall in line with my values in value investing, but I was reminded of when people are mining for gold, sell picks and shovels. And so I know that when I own the primary brokerage for crypto, and it was primary at the time and it's predominant now because I looked at the management. Brian Armstrong is a CEO, super duper impressive guy. I call that the idiot test. I watch a couple YouTube videos of the CEO speaking before buying a stock. And I just had this conviction that Coinbase was the main provider for buying and selling crypto, and I can make money when people buy or sell. It is an asset class, but when I own the business, it can pay me dividends in the future or buy back shares in the future and give me value other than just price appreciation in the stock, total returns, right? And this was also during a time where I had seen ARK go up like this and then go down like this. But I cherry picked through ARK, and Coinbase, along with Vertex Pharmaceuticals, were two stocks. There may be Coinbase, Vertex Pharmaceuticals, and Tesla were 3 of her names that I decided I wanted to have access to without paying her a fee, without dealing with her poor investment decisions. And so I cloned this from, at this point, what appears to be a not very good investor. But I did my own research, and I had this nice long period to invest in the stock. And based on that conviction, I was right, and the revenue went up, and the stock price followed. Right. So I also saw that there was the ability for there to be free cash flow. And that, honestly, that's deteriorated to an extent as crypto assets went down, but they have this ability, and they've also done a really good job at diversifying their revenue streams. So now I own a company that is the landlord for BlackRock and Fidelity to sell Bitcoin ETFs. I'm the landlord for BlackRock. I like the way that feels, right? And so that's why I bought the stock and why I had conviction in it. And I think, that says enough. That says enough about these 3 stocks I've done really well in. And so, I'll ask you to like the video and subscribe to the channel. If there's anything that you learned from this video, any questions that you have, any of your success stories, if you've had some really strong returns, I want to hear about that in the comment section below. But I think we'll wind this video out, and I'm going to show you 3 stocks I currently own that I think might be my next 100% gainers. Starting off with Amazon, which is my single largest holding. Bought too much of it here. This hurt me. This hurting me, though, was actually the things that led me to buy Williams Sonoma and Coinbase to try to diversify away from at one point, I had as much as 30% of my money in Amazon. So we learn about how much conviction we actually have, right? When things start to happen. But I think that this stock still has, 15, 20 years of strong growth ahead of it. And so I know I'll make over 100% in this stock. So that's Amazon. I have a similar feeling about Mexican Coke. Just look how majestic this chart looks. Very bullish looking chart, but I can buy the brand at a lower valuation. And I like the Latin American market. And I know a lot about this company and how they do things. They have a milkman in Mexico who actually is a KOF salesman who delivers glass bottles of Coke right to your front door in Mexico City through an app. So, yep, I feel good about that one. And then lastly, Netflix, just a best in class operator. This one I'm up about 80% on, but this, I get credit because I didn't sell. Better investors than me panicked and sold. But I had been through that 80% decline in Coinbase, Great Depression level vibes. It didn't bother me. And I knew the fundamentals that resulted in this performance. So I had just about as much conviction, I think, as I did capital. Maybe a little bit more conviction than capital, if I'm being frank with you, but some nice returns there as well. So that's it. Guys, I'm Sean, not financial advice. Thank you so much for tuning in. If there's any types of content you'd be interested in seeing from me, you can also leave that as a comment in the description below. And besides that, I'll see you on the next one.